One of the larger things for homeowners is, do I have enough coverage, and what coverage should I carry, and what is all this stuff? Now, we have a video series that goes over the specific coverages, but let's give you a summary of what the main pieces that you need to focus on. The first thing that you need to make sure that you have enough coverage on is dwelling A. That's your actual physical house. That's the location. That's why they call it the dwelling. You live in it. And your dwelling is what sets the tone at the base of all the pricing, because your other structures and your personal property and your loss of use and all of these other coverages are built as a percentage of what your dwelling A is. So building the dwelling A is something that your agent's going to work up for you. And what they're going to do is they're going to take all the materials of your house. What kind of siding does it have? What type of roof does it have? What is the claims history? All of these things that they're going to package in. What is the materials of the floor? What kind of walls? Does it have crown molding? Are there built-in cabinets? Things like that that they're going to take into consideration. Jacuzzi tubs, French doors, all of these upgrades and changes, that's going to build that dwelling A price. That's what we call a replacement cost estimate. It's the estimate to replace the whole house. If we had to rip the whole thing away and start all over. So part of it builds in the cost to tear down and reconstruct the home. Usually the foundation they don't include just because that's usually there, but it's also based off the square footage of the home. So knowing what your dwelling A is simple to do. If you have an average house, there's not crown molding, you don't have a ton of built-ins, it's a laminate countertops, it's just your standard, what we call a construction built or a tradesman built home. It's the cost of what the materials would be based on the square footage. So you take anything that's above ground level on up, and then you times that by the square footage. So if I had a 2,000 square foot house that's above ground and the cost to rebuild it is $220, I now have a $440,000 dwelling coverage on my coverage A. The second part is your personal property, and that's super important because it's all your belongings. It's everything you own. We've collected a lot of stuff over our lives, like a special fork, a special, someone gave me a plate that I love that's a collectible, and I've got these little pop figures, and I've got my computer, and all of the things that I personally own. Most of them, and I would say most is 80% of everything you own, is lumped into a standard category. That's your personal property. Some of them are lumped in there, but at limits. So computer equipment, jewelry, high-end paintings, collectibles, things like that are still covered under your property, but it's at a limit. There's only so much that you can get for that with most policies. If you want more than that, then you have to do what's a scheduled personal property, where you add on to say, this is a $30,000 ring. I want it covered for $30,000, not $15,000. The largest thing that you have to remember with your personal property is there's two versions of it. There's replacement cost, and then there's just your standard coverage. Your standard coverage is fine, and it's cheaper to do. The problem that you run into is if you had a fire tomorrow, you don't get the full value of what your item's worth. You get the deteriorated value. So if you had a computer that was worth $1,500, 8 years later, it's probably worth $300. Same thing for your couch, same thing for your shoes. All of the stuff that you own can go up in value, but in most cases it goes down over time because you're using it. It's got the wear and tear and all of that. So having the standard coverage, sure, you'll get some money back and that's great, but having full replacement costs for not as much additional cost is usually worth having. The main thing is a lot of companies will give you the money to put towards the rebuild of the house. So when you're doing that, talk with your agent, make sure that they have the replacement cost. In our agency, we just plan for it. We just quote most, if not all, policies with that automatically built in. Those are things that if we need to cut the cost down, that we can take those pieces out. We'd rather you have them and be able to afford it, but we'd rather that you can afford it than not have to have that coverage. The third and probably the most important piece is the liability coverage. This is probably the second most important thing for insurance companies to think of, because they know that claims more often come from water damage and water backing up and dog bites and things like that. Those are big. But those lean into what's called liability. And liability, that means you're responsible for whatever claim happens in your house. Friends come over, you have a party, whatever's going on, someone trips down your steps and they knock their head. They're cracked open, they get brain damage, whatever. There's a lot of things that can happen. Someone's driving your four-wheeler across the road, or someone's just gonna sue you because they want to, and your home insurance follows that piece. And all of these pieces fall into that liability portion. So that liability is their ability to defend you to the limit that you set. Most people will have about $500,000 liability, and if you need more than that, they'll usually add on an additional policy to cover that. So in this scenario, the liability is major because this can be hundreds of thousands of dollars. You don't see lawsuits for $10,000, lawsuits for $50,000, $150,000, $800,000, $1 million lawsuits. That's because when the lawyers get involved, not to put them all down, but they need to be paid, and they know if they're going to get paid and it's going to take them months of work and they need to recoup the money for you, they're going to go after 3 times as much money than you would normally expect. So in that case, whether the insurance company wins or loses that lawsuit, they have to pay to defend that, and that's the liability portion. The fourth coverage is additional living expense, and this is really simple to understand. Typically, you want to have living expenses from 18 to 24 months out. There's a percentage that most companies just give you, and it's usually enough. But you're going to see what's called additional living expense. So if there was a fire in your kitchen, or if the whole house burnt down, that's usually the case they're thinking of. And we know contractors get delayed and they're working on 10 different jobs at once. So when someone's trying to rebuild that house, it could take 18 months for your house to be ready for you to live in. You can't afford to pay your house payment because that doesn't go away and go rent another location. So having additional living expense is going to pay a percentage or an amount up to the limit that you set for you to rent or live somewhere else. It can be a family member, it can be a hotel. Shoot, I've had people get campers and live on the side of the property just because they were worried about theft. So there are different scenarios that the insurance will work with you, but you make sure that you have enough living expenses for at least minimum 12 months up to 24 months for you to live in case something major happens. One of the larger things that we're seeing on policies, if you're noticing that your policy is going up on renewal and the prices are going up, one piece that is not a gimmick, a lot of insurance companies are actually removing it because they can't sustain it, is there's something called inflation guard. And what that does is as inflation rises, the value of your home rises as well. The cost to rebuild your house 5 years ago versus today is astronomically different. The cost of materials, the cost of labor, the shortage of labor, all of that adds up to the rebuild cost of your house. And inflation guard will stop your coverage A from going up. Now that doesn't mean they're not going to raise it, because this is why I say it's a little bit of a gimmicky coverage. Although it's good to have, you just got to know the company that you're doing it with. What that does is, let's say we had that $440,000 dwelling A, and the next year inflation has gone up 10%. That would naturally add $44,000 to the rebuild of costs of my house. The positive is my house is likely worth more. Hopefully, that's a different scenario, but in the assumption. The negative is now I got to pay insurance on that. That's like me making more money and having to pay more taxes. Same thing. None of us like it, but it's part of protecting your house properly. If you have inflation guard, then they don't raise that, because most policies have what's called extended replacement cost. Extended replacement cost will go beyond the coverage A. So in most cases, you're going to get 20 to 25% additional in extended replacement cost. Very simple to figure out. You take your coverage A, that 440,000, multiply it by whatever the percentage of additional replacement cost is. So let's just say in this case it's 20%. So 440 times 20, that's 88,000 additional coverage that I have. That doesn't stop the inflation unless I have inflation guard, because it's just additional coverage that I can add. There's other pieces like service line coverages and a lot of endorsements that you can add on. Water backup is a major piece that everybody should have. If you want to learn more about that, I've got some other videos that will go a little bit more in depth on that. If you're like me and you just want to get with the right company and the right fit for you and get the right pricing, I'll put a link in the description below where you can work with one of our local agents that will help you work through the purchase of your home, figure out what the replacement cost is and what coverages are beneficial to you. If you just want to learn more of those specifics that we're talking about, I'll put a video here that goes a little bit further in depth on the home. Otherwise, here's another video that you could check out that would be helpful. I'm Mark with Valor Insurance. We'll see you soon.